Tesla earnings are going to be impactful to the financial market as well, because Tesla's a big, growth name, and the appetite for growth stocks recently has not been great, because what you've had instead is a big, swing towards risk off in the last few weeks, let's call it. The S&P 500 topped out around 52.75 and has been pulling back. We've seen about a 6% pullback on the S&P 500. And a lot of people are wondering, is this something more? Is this something of a bigger sell-off? Is this something of a potential, correction, which is 10%, or, a bear market, which is 20%? Is that coming here for the stock market? And if you're looking at the NASDAQ, the drawdown has been, I believe, slightly steeper. Tech stocks down at one point about 8% from peak to trough. So we have seen a pretty meaningful pullback on the indices, to say the least. That being said, is it over? Here's my personal opinion on the matter. I think that this is a pullback in the context of what will continue to be a strong year for stocks. You might be wondering why. There's a lot of reasons to push back on bullishness on the stock market right now. A couple things that we could list are, you have rising yields. So the 10-year yield continues to rise. This pushes back the idea that rate cuts are on the way. If this keeps staying elevated, guys, what you're probably going to see is the market continue to adjust for potentially no interest rate cuts this year, which takes away the punch bowl at the party, if you will. So rising yields are a problem for the stock market, though, in my personal opinion, it's not catastrophic or not really terrible for the stock market unless you break 5%. If you break, that's the number, and that's the number a lot of people are saying right now. But if you're watching stock indices right now, in 2022, yields were on the rise and people were severely worried about how far the interest rates were going to go up. But then we started to get some confirmation towards, mid and really even, parts of 2023. It looked like the Fed was going to pause, and they did pause. The question is now, and what's really spooking the markets is, we thought it was going to be pause, then rate cuts, right? That was the idea. That was the optimism going into 2024. And if gold was trading up on that, the S&P, the NASDAQ trading up on the idea, the prospect of rate cuts. The problem is yields have been, the expression is, they are backing up. And they're pushing higher. What that means is that, again, bond investors are saying inflation is likely to stay higher for longer, and hence the bond market is saying we need more yield because inflation adjusted, this is going to be, we want it to still be attractive. That's what the bond market is telling you. The bond market is very intelligent. It's got a lot of, it's got its fingers all over economic data, and it's saying, is this market, is it people who are asking for gold, by the way, I am talking about gold right now. Please relax. Yes. Whether you know it or not, when I look at the 10-year, I am talking exactly about gold. If you're a real fundamentalist, you know. If you are not, stick around. We'll get you there. The 10-year yield has massive impact on gold. So if you're wondering, hey, Nick, talk about gold. I am talking about gold. You just got to understand what I'm going at here. 10-year yield rising means interest rate cut expectations are getting pushed further and further away. What does that mean for gold? I'll tell you, it's not good. It's not bullish when yields are rising, traditionally speaking. And if they continue to rise, what that tells you is, hey, gold and NASDAQ and interest rate sensitive areas continue to look not only unattractive, but outright under threat, because rising yields means the market thinks rate cuts are not coming as soon.
Our Edgefinder anniversary sale is almost over. If you want 40% off the Edgefinder, the absolute best deal of the year, don't wait and head on over to a1trading.com to chat with one of our representatives live right now. This is the biggest discount of the year, and we have so many new features to share with you, like our Smart Money Indicator that directly compares COT data and retail data against each other, or our brand new data scanners with even more useful information and accurate scoring than ever before. Now is the perfect time to get this powerful trading tool because the 40% discount won't last forever. Celebrate the Edgefinder anniversary by grabbing yourself a copy today on our website, a1trading.com.
Accompanying that, we've seen a recent jump in the VIX, right? A jump in the VIX, I would say, is two parts. Number one is rate cuts getting slashed. Okay. Number two is geopolitics. Okay. In the Middle East, there's been concerns about what's going on there. The market is aware of this. This is a bit concerning, right? So when you add these two things together, you get a VIX jumping. That's usually one of these is positive for gold. The other is negative for gold. This is why recently I've been kind of mixed on gold. I'm not super bullish. I'm not super bearish. Geopolitics and tensions in the Middle East or Eastern Europe, that's going to give a premium to the price of gold and to risk-off sentiment. But a rising, yields and a rising VIX are a little bit of a spookiness factor to the stock market. So we'll go back to the S&P for a moment. What we see right now is we're seeing a classic bounce. The question is, and here's where you're going to get potentially an answer as to whether or not this is a bounce before a drop, or if it is actually bottoming out. Is the stock market bottoming out at these levels, or is it simply having a little bit of a bounce before a bigger drop? So again, to my friends who are gold traders, we will get there. Don't worry. We analyze gold every single day without fail. So we're going to get there. I'm talking about the stock market though right now because it is very important to gold and to everything else. So the S&P, again, potentially bouncing. Also, did I miss the news? Hold on. Let me pull up the news. I apologize, guys. Oh, no, I didn't. Okay, we're at 9:45. So don't let me forget, guys. We got about 15 minutes to go, which is great. So the S&P 500, again, bouncing. But here's the question. Is it going to be able to break through back up above like 50-80 and hold this area? If that starts happening, I think you might just have kind of a slow grind back higher, which would be fine for my positioning. I actually got filled on some shares on VOO. So I am, by proxy, I'm long the S&P 500. So if the market rallies, that'd be great. I have some tech puts that I've sold on XLK. So I am exposed to upside if the market continues to push higher. Here's the dollar index. The dollar index is continuing to stay strong here. I've been watching this area and talking about this for a little bit of time. 105 is a key level for the dollar index. If price does pull back, I'm a buyer there. We'll see if that does set up for us. Right now, where it currently sits, I don't have any setups here. I think that, if you're looking at the 4-hour chart, you might be able to find some support here around 105.85. So if you're a bull in the dollar index, if it dips down at this area, and you are looking for long setups, could be interesting. Again, for me, I have a couple trades and things that I'm working on right now. So for me, I'm not in a hurry to trade anything. So I'd probably see if we do get a bigger retracement on the dollar index. That being said, if the setup is there at the 105.80, I might find opportunities somewhere. Euro dollar, take a look at the daily chart. Yeah, see, the euro dollar for me is an easy setup if we get a push up into this area. Pound dollar, same thing. And until that happens, I'd kind of just sit on the sidelines for these. Dollar yen, pretty obvious level there. Dollar Swiss, dollar CAD, Australian dollar, Kiwi dollar. So currency trading has been really boring for me. Like I have a setup, but it's just waiting for it to actually form. Euro dollar, if it pulls back, great. That would be a possible sell setup for me, assuming, the Edgefinder still has a bearish reading, which right now it does. We're getting a -8 for euro dollar when considering the economic data, sentiment data, and the technical data from the Edgefinder's top setups algorithm. We still get a bearish reading on the euro. We also get a bearish reading on the Russell, which I already have a short on. Pound dollar, Kiwi dollar, Aussie dollar, euro dollar, Russell, pound Swiss, Kiwi Swiss. Lots of setups on the Edgefinder right now. Flip it bullish. We've got silver. I'd like to look at metals here in just a moment. Dollar CAD, dollar ZAR, euro Kiwi, dollar Swiss, Aussie and Kiwi, copper, dollar yen. These are actually neutral, so ignore those last couple. These are your bullish readings, and I showed you our bearish readings just a moment ago. So, with just about 10 minutes to go before we get into manufacturing and services PMI numbers, let's take a look at gold, see what's going on with the commodities world. We've finally, the bears have been, they're calling for this for, months. They've been saying, hey, we're going to sell off. And I say that kind of tongue in cheek because, again, if you've been saying that, a broken clock is wrong twice a day, right? Basically the point is bears, they finally have seen a little bit of a relief sell after all of this upward trend. I've had people selling or saying on my channel, sell gold for weeks, for really even for months now. And they finally have seen 1 or 2 good days to the downside. Now, I don't have any positioning on gold. I was able to make some pretty good profit when this thing exploded higher. I was long before this big move. You can go back on my channel and watch that video if you'd like, or watch the live streams during that time. I talk about gold pretty much every day when I was in the trade. I am no longer in the trade, and I'm feeling okay about that because, again, it's really pulled back a lot. Ivan, the dollar index, is it coming down or is it going to keep going up? What do you think?
Down.
Okay.
Why not? Why not down? Now I think the move has exceeded itself by the range we have created, and we have FOMC 1st of May, give or take. So that's like next week. So I think we are either in a range or we're gonna pull back a bit because I think FOMC is gonna be bullish. So the market is like setting itself up for another little high. So we have hit monthly target, hit the weekly target. We're kind of not going anywhere because we're just waiting for FOMC, and yeah, that's kind of, I think that's where we are at the moment.
Okay, fair enough. Yeah, I think there may be a bit of a pullback here for the dollar index, though. Would you be a buyer of pullbacks, or are you more actually talking about looking for a longer term sell?
No, I'm not looking for a sell, Nick. I know you were pretty tabloidic about it, but no, I'm not looking for a sell. I'm just looking for a buy. But I can't buy Burj Al Khalifa kind of a thing. Like I can't buy the peak of the peakest peak. I need to have a pullback.
You can't buy the tallest building in the planet. Got it. Okay, that makes sense. What about the? Here's another question for you. So, this dollar strength has also been partially because of talks from the ECB and the Bank of England about potentially being more dovish, especially when compared to the Fed and some of the strong economic data. Do you have any opinions on the euro or the pound against the dollar specifically?
I saw yesterday, in my lack of power, that market was pricing in a rate cut earlier than expected, a bit 1 month earlier. So that's like August instead of September. Yeah, also that's kind of bearish, but it's kind of like depending on what the dollar does. But in itself, they are bearish. That's why we kind of like look for sell setups in those pairs. But averagely, or technically right now, we have exhausted quite much of the move. You can see there was at least a pullback at the moment. And we have paused on euro, so overall still bearish. But again, I think I talked about this many times. I talked about this many times in the meetings. But that's the first pullback, second pullback, and I've seen people sell there, and I'm like, hold on, that's where it ends. So we have had our 3 pullbacks. I don't know if that's a theory or I just see it. So when that has happened, that time for a pullback, and we're currently doing it. So if it goes up to 107, 60, 70, I'll be yay. Yeah, that's kind of my stand.
Yeah, and with these big moves in currencies, it makes me wonder if there will be a bigger divergence trade to play out for the rest of 2024, or if they're going to go back to. There was a little bit of period of time where, if you looked at the pound specifically, there was just so much sideways movement on the pound USD. It was super choppy because both central banks looked like they were kind of on the same pace. Arguably, what's caused the shift in momentum here, really favoring the dollar, has just been the difference in dynamic between the two central banks. I just wonder if that is, as you mentioned, perhaps it's a bit overdone, but perhaps there's a chance for a bit of a pullback, as you're mentioning, a little deeper, be a little bit more patient on it at a retest of that consolidation level. That could be really, really interesting. But again, the overall story is still rate cuts are on the horizon, I suppose. What do you think about gold? I've had a lot of people ask about gold, and I'll tell you this. I'm a little hesitant on gold itself simply because, if the Fed is going to stay higher for longer, gold was trading down here at higher for longer, right? This was higher for longer. We're way up here now. Now you could point to geopolitical risk, and that's why gold is so high. But to me, it's a little concerning. The price of gold could pull back further, in my personal opinion. But what do you think?
I would say you're getting a discount. Also, I see it on the 1 hour. So I see what? Bullish range pullback, wherever that is, however deep that is. But if you look at the 1 day, if we look at it daily, of course it looks like the tallest mountain in the world. But it all comes down to, okay, so how far can we go? We are, at least by my standards, at monthly target. It is supposed to be a pullback. What month are we? We are now in April. Okay, we can get some dollar strength. We can get this one down. But ultimately, where's all this leading us? It is leading us to rate cuts at the end of the year. Just one pricing at the moment. And of course, if that fades out, that's kind of like, okay, we have to go lower on gold. But the long term kind of wait forever for is lower inflation, because that's the goal. That's what they're trying to do, and that's what will happen in the end if it takes 5 years. So the long game is gold higher. It's just tricky to get that in that entry. So I like this pullback, but technically I can't. But I like the structure of it, the structure that it actually comes down and not just continues higher.
Sure. Fair enough. Well, another one, Ivan, I've heard you talk a little bit about this in your webinars and also in the chat in our Discord group.
Yeah.
Oil has pulled back pretty aggressively. And you make a good point about this, and I want to let you talk a little bit about it. When it comes to oil, geopolitics, how is the interaction there? Tell me about that. Why is it down? And a lot of people are probably confused by this. Geopolitics has been on the rise. Why is oil down recently?
Find all your notebooks, people, because I'm going to tell you what I've been telling for years. Okay. So what happens is that in an event, any risk event, what generally tends to happen where there's gold, if it's Saudi Arabia, if it's Iran, if it's Russia, if it's Ukraine, if it's America, if there is a risk event of any kind of threat, gold, oil, it generally tends to happen on the weekend, but oil spikes up on Monday on the open, hits a target, and then it falls down. And the whole question you have to ask yourself, is there any escalation? In the seconds after, yes, there is potential of escalation. Israel didn't escalate until, was it Friday, Tuesday, Thursday, Friday? That's when the market went higher. Okay, but then we have had the escalation. Iran didn't do anything. They said, okay, they didn't hit anything. Israel's like, well, we're done. So what's going to happen then? No more escalation means oil going down. It happens every single time. So for me, it's like, okay, if you're not in the buy, if you're not in a buy position at the point before it happened, don't think about it.
Right.
Then you need to think about what you're going to do next. What is likely to happen next? And if you take this as a blueprint, lower.
Yeah, and
that's not financial information. That's not other trade ideas you're supposed to do anyways. But hypothetically.
Yeah, no, and that's a good breakdown, Ivan. And that's the thing, is when it comes to trying to trade oil, a lot of times people will make the mistake of, as soon as something big happens, they try and chase the move. But the market is so fast moving, it picks up on stuff so quickly that by the time we all hear about it, a lot of it has usually been figured out. That being said, as you mentioned, you need further escalation to further the move by the time you get into it. That being said, I think that there's also something to be pointed out, which is if you are bullish on oil and there is a geopolitical risk, generally speaking, wait to be, in my view, this is a better way of approaching it, wait for pullbacks before getting in if you still think that that geopolitical risk is real. If you're somebody who does think, that risk is not going away and that there could be further escalation from here, that's fine. That's a valid, if you have synopsis there, if you have some in-depth analysis on that, that's fine. But wait for pullbacks. Don't take peak risk by buying after a big spike, because usually, as you're pointing out, Ivan, usually that's already known, and usually there is a corrective move that comes pretty quickly. That's why it's been confusing to most traders right now, where we've heard all this stuff, but again, that's in the past. The market is always forward looking, and if there's any de-escalation, the price of oil dramatically drops. So I would say, again, if you are bullish on oil because you're trying to hedge that situation, still that's fine, but wait for pullbacks, do all your due diligence and your normal risk management. Is that fair to say, Ivan?
Yeah, I'm a bit lost here. Please help me out. Can you find the CRT report for oil, the last one that's been pulled? Because that was 16, right?
Yep. So oil, this is the latest change from the previous report.
Yeah. So, and then they added cells on it.
Yes. So their net change, they actually added shorts pretty heavily. They did add some longs, but dramatically more shorts were actually added, which is interesting, Ivan, to say the least, considering, ahead of this latest week, there was selling going on in oil.
And that is after Iran attacked Israel.
Yeah,
that is Tuesday, and it happened on the weekend or something. Yeah,
I'm glad you pointed that out. It's a good point. Is just to see, that money flowing in or out of something. At just an interesting time, you would assume that they would have been buying, but again, there's the COT showing you sell. So
did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.